All right, everybody, welcome to Cyber Bull. So we're going to first talk about Tesla stock price action. What made the stock jump $11 to over now $200? Is there a short squeeze that could possibly happen to this? And I want to get everybody's opinion on the valuation. What parts of the business is contributing to how much of the stock price that we have? And there's other topics we'll cover as well today. So let's get started with you, Xander, first. Tell us what do you think happened to the stock price today?
6 days ago, when you'll see this, it'll be 7 days. I kind of smelled this out that it was possible that they would do an inverse head and shoulders, just because the way it pushed down and immediately rebounded to 195, setting that first shoulder. And then I kind of posted about this, that we would go down to the low 80s and then come back up and go visit 195 again and possibly get to 200. So in technical terms, this is, in my opinion, a technical move. It's not a fundamentally based move. So this means, options and Wall Street. So the neckline has been broken at 195, but then you want to measure the length of the head. So 175 to 195 is $20. So what's anticipated now is a 215 resistance level, and this is purely technical. I don't, we haven't had any kind of news to justify this, and maybe we could talk about if you guys heard anything in terms of short squeeze. I'm not sure. I've heard of anything in that regard, but that would explain the technical move here with calls being bought up, and so this could be a gamma squeeze is what I would classify.
Let's go with you, Jeff. What's your thinking of what made the stock move?
What do I say every day? Nobody knows why the stock moves one day or another. If they did, I mean, I'd probably want to be friends with them and talk to them every day. and measure.
We're buyers and sellers.
Yeah, there was more people buying the stock than selling. Maybe, kind of not a lot of bad news out there either. I mean, we went a couple of days without anything like horrid. We're halfway, we're more than halfway through the quarter, and the European price cuts have been undone. The China ones were small, a couple of trims, and the US stuff, I mean, they've increased Model 3 a couple times. So there's this narrative that's been out there for over a year of just cut. If you sit down and do the math, they're reducing COGS faster than price. Now we're only halfway through the quarter, but Tesla did show a hand, I think, last week when they said, we're going to reduce prices on Model Y for a couple of weeks. We want to blow out some inventory. There's rumors out there that Texas is building more. There's rumors that they're not building more. Fine, whatever. Point is instead of having this end of the quarter delivery wave where invariably what that is you've got a quarter, there's really only 75 days of production when you really think about cars that can be delivered. And in many quarters in the past, Tesla was doing 50% of the quarter in the last month, 40% of the quarter in the last month, 60% at one point in the last month. That's terrible from a COGS perspective. You're expediting everything inbound, outbound. So long story short, I like that move. I think they telegraphed that pretty nicely of like, hey, we're not doing these big cuts and we're not doing big movements anymore. We want people in the door. We don't want to condition our buyers to wait for the last couple of weeks to buy a Tesla because that's when all the spiffs go on. So that may have been a tell. We'll see. But it's hard to say one way or another, but it's certainly from an RSI perspective, it definitely looked like it had been oversold for many days in a row. But again, I kind of look at fundamentals first and overlay anything technical.
The company and the product. Don't look at the quarterly stock movement.
As a trader, I got to take some off the table and wait for a better price.
A very realistic bull, questioning certain decisions.
The rational bull. We enjoy listening to bears.
Looking for the red flags. You're supposed to react.
What happened that made the stock price move today? What it is that there was movement, there was a development that happened with Elon's stock compensation plan yesterday. So what happened was yesterday, there was news that the letter was sent to the judge by both the plaintiff's lawyer as well as Tesla and Elon, saying that they're now going to negotiate and ask for a stay in the ruling of the judge until they come together with kind of this bond amount that's going to, how much is the lawyer's going to get paid. I think that signals that there's going to be a negotiation now between the two parties. And I think that that's why, this, I do call it an overhang. I think it's a massive overhang. In fact, I think it's the biggest overhang that's happening right now. This uncertainty between Elon's comp package and how they're going to make him whole from the previous, but also more importantly is what's going to happen in the future. If they can give him a massive comp plan for the future and solidify that a robotics AI company, this is what people are waiting for. And at this point, it's this huge uncertainty. So let's go with you, Christian. What do you think happened with the stock price?
Yeah, I mean, I love surmising. It's hard to know, but if you look at the day, and this will be out tomorrow, but money came out of NVIDIA, money came out of Google on reports that OpenAI was going to do a search. So, those worries are there. So people pour out of Google, Apple's been down, Amazon a little bit came out, you got Bezos selling. So sentiment started being bad there, and Tesla being down 25% year to date. Now it's only down 20% after a huge move. I think money rotated into Tesla because it's been beaten down and people are looking for opportunities. So there's been some rotation. So I think it's simple as that, mechanical. I don't think anything specifically fundamental changed for Tesla. There was no specific news to what Xander was saying, but it could be, like Tesla's been beat up and let's go there. Maybe things aren't as bad. A lot of the doom and gloom is maybe priced in and maybe good things are coming. So yeah, money rotated, but I think it was maybe just rotation. Some small caps did well again today. So money's coming out of some of the winners and going back into some of the ones that have been beaten down. So let's see what tomorrow brings. We got PPI. I'm always feeling good about PPI. Usually PPI, I'm very confident because I don't think it's going to be as high for PPI as it was for CPI, because I think the producers' prices aren't as affected as much, and they've been beating quite consistently. So I think we're going to get a good number, and I think that the rally can continue. And I think Tesla is getting some momentum, so I think that can continue. But I think stuff like NVIDIA could continue to run. It had one day of a break, but it was down like 1%. It held in fine. So I think it'll be interesting. But yeah, the market's doing really well, and we'll go off to the races.
I was starting to laugh because who else? Take a look at Christian. Who else thought that was his like a necklace? He's New Yorker and he's wearing his necklace or something.
This is back in fashion. People are going back to wire.
Hey, Christian, can you talk about the CPI and what the analysis was on that? Because I think that's also important, because it was a bad number, but then the market's rallying.
Yeah, CPI, the market sold off bad, and I was glad that the next day we recovered a lot of it. That was a good tell. But yeah, CPI, it came in hot. And again, people, that instinctual reaction is to sell everything. The Fed's got to get tighter. But I think once they realized inflation actually came down, even though expectations was a tenth hotter, overall inflation still is trending down, even though it missed the number. So I think the market just overreacted. And I think we got retail sales today, which was negative, which also I was talking about in our group that was good for keeping the Fed a little bit dovish, because if consumers are slowing down spending a little bit, that disinflation story continues that narrative is intact. And I think that today was a good day. We chopped around, but ultimately we were green, and we closed pretty strong after kind of being so-so. So I think tomorrow will be a big number on the PPI, but I think we're okay.
All right, let's go to James. He our guest today, but he asked to be last on this question. Go ahead.
Yeah, well, it's typically, I think it's a huge confluence of many things happening all at the same time, like a perfect storm. So first of all, we know Tesla is one of the heavily shorted stocks, if not the most. The mainstream media FUD is running at 100 miles an hour. It could not be any more extreme. And that actually makes very many retail investors very nervous, so they kind of sell. Then we had the recent Super Bowl dud ad, which may have contributed to concerns, maybe put a lot of people in short positions. I do believe there was signs of a short squeeze yesterday, especially in the run into the close, and then after hours, there was some short covering happening. Then from a technical analysis, Xander nailed that. perfect inverse head and shoulders. The RSI mean reversion was completely oversold, like a nearly 1.6, very, very out of the ordinary. Like that bottom at 175 was just a perfect bottom to buy. And then you have the self-fulfilling prophecy of TA. People believe in things like inverse head and shoulders, and they buy based on that. And that drives things up, catches the shorts stuck, etc. And then a lot of other concerns regarding all the other stuff happening, the comp plan that you mentioned too. And I think probably the most important thing, though, is what Christian said regarding rotation. And I do have a slide, if I can pop it up real quick, just for us to see if you can see it there. This is from Charlie Bilello. And it's basically the returns of the MAG 7, 2022 to 2024, year by year. And when you look at what is probably the most disruptive company of our lifetime, maybe ever in the world, and to see it so beaten down so much in this period of disruption, I think people, they look at their NVIDIA bag and say, well, I've made 500% in a year and a half, and I've made 390% on Meta. I'm going to take some of that off and roll it into this oversold thing over here called Tesla. So I think definitely there's a lot of rotation happening too. But these numbers are kind of stunning. And again, few really understand the value that is Tesla. And I think this chart says it all. But there'll come a time real soon where that'll all change.
Can you explain a little bit more about the short squeeze? Some people always just want to better understand how do you recognize it? How do you know short squeeze and what exactly is happening?
Yeah, so you can see some of the actions when a move happens, and then you see you can watch the actual volume between buyers and sellers. And when people get caught off guard, they scramble to buy back real fast, and it happens at an accelerated pace. What Xander also spoke about was a gamma squeeze. That's when people are kind of using leverage like options, and that causes huge option market coverage as well. This is just a mini short squeeze, I think, because of the flood storm that's happened since 2024, since the beginning of the year. And you could just see that happening running into the close yesterday, and then after hours, and then today it was just ready to perkle up and explode. So that's pretty clear once the market came back. So there's an indicator that you can use called VPSV on TradingView, and you can see very clearly the difference in buyers and sellers, and that gives you a good indication as to what's happening.
Okay, so one question that I'm asked quite often is they want us to kind of give our expectations or how we value Tesla. So assume that the company is, well, it is, right? We're valued at $200 per share today. In your mind, how much of that $200 is assigned to auto business, and then how much of it is to the other businesses? We know that Morgan Stanley, Adam Jonas, just had a report, and they're actually still staying the same. He has a $325 price target for the next year. Of that $325, he only put $75 into the auto business, and then the rest of it is AI and FSD. He does not put anything for the bot or anything like that. But I'm just curious with you guys, with the $200, what do you think of that is the auto business? We'll start with you, Jeff.
Yeah, I don't have it exactly in front of me, but in that analysis that Adam Jonas did, I think he had a $2 EPS on Tesla this year, and I think they're going to handily beat that. I mean, so that's part of his assumption. He's really over biasing against auto and saying there's all these other opportunities as to why you should value the company. I don't think he's also putting a big emphasis on energy, and that should considerably ramp up this year. So in general, he has a lot of themes in his analysis that are helpful in terms of like pointing to other fund managers of like, hey, look, they're doing this thing on the network infrastructure side. They're doing this thing on the autonomy side. No one's really close in terms of what they're doing. There's no other automaker that's doing this end-to-end solution, so they should be valued higher. They could also have a components business. They have this supercharging business. So these are all these things where you start having these sum of the parts conversations, which are, does Tesla have individual businesses under them that are, either undercalled or on their own, they could be worth, a lot more. And so yeah, I mean, in terms of that, I mean, I don't think the AI component is significantly in the name. So Tesla is selling, I think hundreds of millions of dollars of FSD quarterly. They're selling a lot of supercharger time, and they're doing a lot of different. I'll take superchargers aside for a minute. From an FSD perspective, I actually think they're selling more AI from a software perspective and even hardware than anybody besides NVIDIA. And, but it doesn't get that recognition in the marketplace. And I think they're set up. And we were having this conversation, I think, on a space a couple of days ago. The rate of progress that may occur with V12, now that a lot of the heuristics are out of the way and this thing is video in and controls out, this could be one of those things where it improves rapidly, kind of like these discussions of GPT-4 going to GPT-5. And you saw some of the video demonstrations today of like what these tools are able to do. They're able to improve rapidly. So if FSD adoption kind of gets over this hump, I mean, there could be a significant move that's really not priced into the stock. So I think in summary, I actually think from an auto business perspective, if you look at ICE plus hybrid, that business is in net decline. And all the conventional automakers are there. That's where they have all their capital. That's where they have all their R&D. And they have very little efforts on the EV side. The company with the biggest effort on the EV side is really Tesla, followed by BYD and some of the Chinese makers. But Tesla's actually the only one that's actually doing it profitably, consistently. So I think they should get a large valuation because of the growth of that EV business going forward. So I actually think it's actually undervalued in many respects. But again, when reality sets in, you start thinking about other auto businesses and where they're rated. Remember, they're rated single-digit single-digit PEs, and the reason is that their PEs are actually being discounted. Their valuation is being discounted because they're living in a business that's shrinking. So, in long story short, I don't have an exact thing of, Dojo should be worth this, auto should be worth this. I think the whole thing's a bit undercalled. I think Tesla's going to continue to grow the auto business for the next set of years. I think the energy business is going to grow, and they're going to begin to really overlay this AI piece with FSD and the bot starting in about a year. So this is the time horizon where people have to think, well, when do I get in? How long do I sit on the sidelines? Because you're going to have a couple of quarters here. They're going to be challenging, but I think after that, they're going to really start showing progress.
Yeah, I think I need to clarify my question, right? So my question really is two parts, right? The first one is the current price is $200 per share, right? I think, I don't know, what is our market cap right now, guys? 650, 700, something like that?
638.
638. Of
Billy.
that, how much do you think that the market is giving to auto, and how much of it is the option plays? And then the other question would be, what do you think it should be, right? Based on your forward things. So, okay. Who wanted to jump in? Somebody?
I was just going to say, Jeff, for those people that aren't paying attention to all the AI plays like you are, what did you just mention about something was shown today? What company was that, and what was shown? Or did I catch?
You're talking about the OpenAI showed demos of basically command prompts in and full video coming out. So basically, you would say the words, crowded city in Japan, people walking, snowflakes falling, things like that. And all of a sudden the output, instead of it being a picture, like what you see in Midjourney today, was actual full on video.
That's very good.
Awesome.
Too.
Thank you.
Yeah. Okay. You want to go next,
Yeah,
James?
I could jump in. Oh, go
okay.
ahead.
Christian, go ahead.
You want me to go? Okay. Go ahead, Jane.
I just put together a quick chart on the fly. So here it is. This is hopefully this will answer your question. So this is 2020.
This is on the fly.
It's on the fly. He changed it.
No, it's what is in the kind of the valuation model for 2025, and just carved it out and created a little pie chart for you all to make it visual. So this is not 2024 because we're in the middle of that year, but for 2025, I do believe the stock is worth $512 at the very least. That comprises 47.8% automobile, $249. I have a lot on FSD. Remember, these values explode, and I assume that the stock markets look forward 2 years, not today. Like if you look at Wall Street today, they need their pencil and their little box to fill in the earnings per share every quarter to be able to understand where they're going. This is looking forward 24 months, and I allocate $76 to FSD, about 14.6%. Semi and van, 0.2%. It's a nothing burger. Megapack, that is extremely undervalued by the markets. They have no clue what's coming. It's high margin. They have demand out the wazoo. They have the second mega factory, going to be launched sometime this year in China. It's massive. Also, the superchargers and hardware. That's also going to be a big business next year. That's 1.5% of the actual pie. Optimus bots, they said they're going to ship next year, so I threw a little bit in there too. Once the world realizes they can do that, and when you look at what the competition are doing too, bots are very real, and they're going to become very good very fast. And then the Autobidder, 4.6%, $24 allocation. All of that adds up to, let me check exactly, because I did this in a bit of rush, $521 per the year end 2025.
Very nice.
Nice.
Wait, sorry. You got to switch back. Okay. Wow. Okay, so that's
a nice shot.
very
Yeah.
interesting. Okay, I don't know. Okay,
Well,
I gotta think.
basically,
Making Herbert excited.
the takeaway.
No.
your question was, Herbert.
No.
Your
Yeah,
question was, how much do you allocate to the call options on the future versus the car business? That's what I tried to pull out for you. It's
I got
basically
you.
half.
But exactly half.
And remember,
that part I can
it
agree.
radically changes in 2026, and then 2028. Forget about it. It's all bots.
But
It's all
see, your
Christmas
auto
next
bidder-
year.
Yeah. So first of all, you have a price target next year, 520.
21.
Yeah, that's way high. That's like
But
too
that's
bullish.
if Wall Street figure it out. That's if Wall Street see an Optimus bot doing productive work.
Herbert, this is being recorded. If it hits
Meaning
500 at the end of next year and you're saying he's too bulled up, we're pulling this out.
Well, I think it might be the other way around, dude.
I created
I'm
other
a bull.
exhibits.
To bring
as
everyone
well.
down. I could get everyone unbold.
Do it.
Again, this is the way a market should look forward. So you look at the valuation of Nvidia, which I also appraise all the time too. It looks forward 2 years. Okay, that's what it's doing. That's how it's pricing Nvidia. I'm taking the same discipline to Tesla.
I hear what James is
I
saying.
got.
Let me take another.
I still need
Okay,
to
go
just
ahead,
keep
Herbert.
going at this. So first of all, I think your
Well,
500 plus is way too high for next year.
Remember, year end next year. Call it 24 months from now. It's a long way to go.
24 months from now.
There's going to be a lot of tailwinds. And a lot of earnings are going to hit the bottom line, as Jeff knows.
End of next year. So the problem by end of next year is Model 3 is not. It's not yet. It's just ramping up, beginning to ramp up. Bot is beginning to ramp up. So my issue with this is not necessarily the price of 500. It's that you don't give enough in your analysis, in your proposal there, to AI, to bot. You give so much into a car, and you give so much in energy. And I think that the auto business is already baked in. So you give it 275, and the price of the stock today is 200. That's all I'm saying to it. I get that. It's, it's market forward looking, but I'm telling you that it's the bot. That's the one that's going to make it. The price is 500, not any of the others. But you give it too little. Yeah, that's all I'm saying.
The point is, I'm appraising it like Wall Street would if they see what's going on. If you ask me what Tesla's worth, it's worth at least $1,000 a share right now today. And it sounds like I'm a hyper bull. But if you can wait 3 to 5 years, you're going to do very well. And that's the message. You guys know that. Sir and Basher knows that, etc. That's what you're playing for. This is the most disruptive company that can execute and can scale. Those are the two things that, again, Jeff, you understand better than anybody else. Well, I'd like you to double tap into that, Jeff, and talk about those two key.
I've been talking about it for a year and a half.
There you go.
Let me push back on it a little bit. Let me push back on that a little bit. So I like your analysis. So what I would say is probably like probably $125, $150 is car. So when you talk about Tesla, it is a disruptive and it's an innovation machine, has the greatest entrepreneur ever. But here's the problem. Basically, all the money made is from the car business. Now, you could go out and say, robotaxi is going to hit. I'm big on bot. I think bot's the easiest to do. It's a hard project, but it's the easiest that could actually happen because cars aren't flying 50, 60, 70 miles on the road, and things could go wrong. And we've already seen instances, it was in the news. So what I would say is, I don't think Wall Street looks out that far, to be honest. I don't think it's 2 years. I think it's 6 months at the most, maybe a year, because when you look at like something like NVIDIA, they have growth, stalling like in not this year, but then next year it hits a wall. It goes to like 15%. But if you believe Jensen Huang and what he's saying, that and Sue from AMD, that it's going to be 400 billion, a trillion, and Sam Altman wants 7 trillion of an investment. If you believe anywhere in the middle of that, then Wall Street's not looking out, because NVIDIA is trading at low 30s multiple next year. So if actually AI is as big as what the CEOs are saying, Wall Street hasn't taken that into consideration for 2 years out. They're looking pretty much at a year and maybe a little bit into the next year where they have it flatlining. So I think Tesla can be the biggest company in the world. But the problem is, in order to get to robotaxi, in order to get to bot, which could be years away, you need the auto business to support the earnings. So I think it'll be okay. But if the auto business is slowing and the growth is slowing and the earnings go down so much, it's hard for those what ifs to help the valuation. It will, because I think some of the AI is in there, but I don't think it's all in there. Maybe not even 20% in there, around there. So you need the auto business to continue to grow, and you can't have, like Elon was talking about, you can't have margins go to 0%, and they're not. But if they did, I don't think you can then think Tesla's going to 500 or 1,000 if earnings are decelerating. That math problem does not work. Okay. Earnings going down every year with the promise of great things to happen won't show up in a stock price until the great things happening, actually some of it hits somewhere. And there's an actual proof that this will occur. That's just my opinion. Can it occur? Of course, but I think you got to have that realm in your head.
Christian, let me throw a curveball your way. All right, an expected value exercise for all of you. All right, we've got 5.5 million vehicles floating around the place. We all know we're 95 to 98% done with FSD. It's coming in select jurisdictions. I'm not saying it's going to work all over the world. And then calculate a take rate and multiply that take rate by the fleet by $100 to $200 a month. That is pure bottom line margin. Over to you guys. What do you think of that? That's a simple way to calculate the call option of the future. Xander, what do you think?
I'm with you. What I was going to say was that the market has completely priced out FSD, or almost completely priced out FSD. You have like some energy in here. You have a little bit that still believe in FSD, but to be this low of a price when we have received a glimpse of the future of what happens when the market is bullish and what this company was 3 years ago. Like, think about the difference between what Tesla has accomplished in the 3 years, yet the price is half of what it used to be. So I just
look at what Tesla's done with FSD pricing. They've made it very defensive. They made it a high bar. It's a couple $100 a month, or it's $12,000 up front. It's basically a third. It's about 30% of a new 3 or Y, which is what is the vehicle that they sell. So they can just, and they know the functionality is not there yet, but once it does get there, and I just talked about the nonlinearity of now that they're full, video in and controls out. When that gets there, they can be very disruptive in pricing. There's a number of things that they could do. They could even, they could charge per mile. I know Omar had that idea too of charging per mile. There's a number of things that they can do, and this is not being priced in. We had Dan Ives on one of the shows. I think it was one of the spaces, Herbert, and we asked him, what do fund managers think of FSD? And he says of the 20 fund managers he'll talk to, one of them brings it up. Nobody's putting that in there. So to that point of like what happens between now and the compact car ramp or now and the bot ramp, I think you have a couple of things. One is Tesla has a real probability of sequentially improving gross margins this year. It can go in another direction. I totally get it. There's people betting against the auto market this year. The auto market can continue to decline, but EVs are going to be a net adder still. And that the question is how much and how high. So there's a couple things that could happen. They could sequentially improve gross margins, and they're not that far away getting back to this magical 20%. There's a lot of work they have to do, but they could do that. And then as this FSD piece starts rolling in, by the way, nobody has stepped up and said, we're going to make a ton more EVs than we did the years before. So those credits are still going to be there in mass. So there's a lot of wind. There's headwinds for them for sure, but there's also some wind at their back as well between now and the next leg of growth.
Yeah, and I hear what you guys are saying, but just to sharpen it, when you go from, again, you know, I'm bullish, but I try to be practical, right? I'm trying to keep in the realm of, I understand you can multiply bots and how much profit they'll make per bot, and you get these magic numbers. I get that, but I'm trying to stay in the realm. When you go from estimates on the autos that they can make $6, and now that looks like it's more like $3, don't you think it's rational for the market to then re-rate the stock from one, and you have declining growth and margins that go down? Don't you think that's reasonable to say, okay, it's not a 1.2 trillion valuation, maybe it's 700 billion?
Yeah.
Like, I don't think that the market is completely out of the realm here where we're saying, no, it should be worth 2 trillion today. I mean, you can make those claims, but I said it on the space the other day, like, there's a lot of companies that could say, it just happens like it's more for Tesla. Like, if Google comes out and Gemini and this great product and every Android phone, I'm just saying, like, they can charge extra for this great feature, and you multiply by every user that owns an
That's
Android,
investing.
you get a major
Christian,
number.
This is what investing
no one does
is.
that. No one's saying Google.
No, what James is saying makes a ton of sense, right? It's like, okay, you were just saying earlier that it's all about earnings. And if you see depressed earnings next year, and if the earnings don't grow, then you're not going to give it any, you know, auto has to carry. But what James is saying that if you look at what's happening with FSD, just FSD, not robotaxi, as it improves, the take rate will go up. People are paying $200 per month for this thing. And so now you've got 5.5 million cars on the road. By next year, you'll have 7 or 8, you know, 7, whatever it is, 8 million. And then it just exponentially goes up. And that is what's happening. Now, once you start increasing the take rate of FSD, that's margin. That's pure margin. Now you're going to see the margin go up. So James, when you showed your chart, what I was just trying to say was you had auto taking up 50%, and then you had energy taking up a big chunk of it. Where did you put the FSD? Because I thought I saw small slices in bot and FSD, and that's the part where I was just saying, FSD, if it's part of auto, then great.
Yep. FSD based on take rate and price is $76. So it's 14 points, call it 15% of the overall price of 521. Okay. But the two big kahunas are Megapack, business, and car. But that changes very radically in the very near term. So I'm talking 2 to 3 years out. And it could even change sooner. We don't know when that tipping point is, when everything just completely flips the other way to other lines of business. Yeah. And again, and Christian, you're dead right. If I'm filling out a little form with earnings per quarter and what it's going to be next month, I get it. $200, $300. But that it's like I remember investing in things like Google and Amazon and Netflix when they were tiny. And you just got to, you know, and sometimes when I invest, like when I started investing in Tesla, I had no idea they'd have a 48 volt steer-by-wire bulletproof truck in 5 years. It's like, I would never have believed you. Or FSD to be at the level that it is. And I take FSD a lot. I do 250-mile trips one way in weird conditions. I would not get in a car and drive long distance without it, to be honest. It's saved my life twice, I think, over the last 5 years.
No, and 100%. And, you know, I like to play a little bit of a contrarian because I think that conversation would be kind of boring if we're just all agreeing with each other. So, but what I would say is, you know, and again, I'm just saying, I don't know the future. And I'm sure I understand what Herbert's saying. You get all these cars, you multiply it. I get it. But it's year after year after year. The take rate has not improved. So again, what we said on the space the other day was, what if, Herbert, I'm just making a conversation. So since you guys know the answers, you can tell me. Since the take rate has not really gone up, and the price they're charging actually has gone down a little bit, what is the scenario? Do you ever play in the scenario in your head? Maybe there's another local maximum and it doesn't get to where it needs to be for a very long time, and that doesn't come to fruition. Does that ever cross your mind, or you just
Of
know
course.
in 2
Of
years?
course. It's
Okay,
a
so isn't
state
that a
of
risk to the
probabilities,
stock
right?
price from
But the
right?
reason
So what's
why
your probability they can't get it done? Is there, do you
okay.
factor that in?
Yeah, of course. So right now, the reason why the take rate hasn't gone up is FSD is a beta. It's nowhere near something that's actually providing tremendous value. It's getting close to being safer than a human, but it has to be like, it's way safer than the human if it's supervised driving. And so that's why you have a take rate. People playing with it, enjoying it. This is not something that people demand to have. Do you believe that FSD 12 is different than 11, right? And so there's this feeling that this is neural networks. None of us here have played with 12 yet, so we don't know, but we're hearing reports early. So once this comes in, if you believe that neural nets is going to have a faster innovation, then that's the bet. It's a bet. It's a gamble you're taking in. So the probability right now is that 12 is way better than 11, but not just way better. It's like a step change because of how fast it's learning and how fast it's learning to counter the edge cases. We're starting to hear from Omar, for example, several edge cases that it's now able to do that it hadn't been able to do previously ever. So if you're making a bet. So the probability right now is that FSD 12 may not be robotaxi, but it can get to the level where it's way safer than the human and that you prefer to drive with it, because it's actually the big difference between 12 and 11 and the others is that it's not jerky. It drives like a human. People prefer that. So if I can tell you that I can pay $200 a month to be able to have a car that's going to make me safer, I would do it. And then your take rate goes up. If you don't think that that's going to happen for 5 years from now, then you're right. But I believe that the probability is the likelihood is going to happen this year, but the higher probability would be next year and certainly by 3 years from now. FSD as an add-on ADAS system, not robotaxi, is going to happen. And now you can calculate what James is doing. You go ahead and calculate how many margin impact that's going to have in a couple of years.
I even before you get to the FSD conversation, there's a real likelihood that Tesla can continue to improve gross margins and just as an auto business be 20 points shipping EVs that are growing anywhere from 20 to 40% annually and be the leaders in that business. There's an easy scenario where that plays out. So we'll see. They're the only proven company in the space that knows how to execute and scale. And it's the Tesla supply chain gets a zero, and their whole effort, their whole engineering, it gets a zero in terms of their ability to scale. Scaling is very difficult. It costs a lot of money, and it's difficult to do profitably. And they're there. By the way, their AI. If you look at some of the AI efforts, going back to the AI conversation, so ChatGPT launched. It's had some stumbling issues. Microsoft Copilot launched. It's got some issues. It's got a lot of negative reviews about it. All these things are going to need time. FSD beta has been out there for 3 years, being thrashed upon, and it's the take rate is believed to be low. It's been getting beat on for the last 3 years. I think if anything from an AI perspective is going to emerge at scale and be wildly successful, it's got a chance of it. It's also has, to your point, it also has a chance of failure too. But it's been in the oven for a while, and it's gone through I would say a pretty big transformation here going to 12. So I'd like to see. I'm more of a show me person. I'd love to see if there's data wrapped around it. But again, I don't think you even need it. I think their auto business alone can stand out until they get to this compact version vehicle.
Yeah, Christian, I think it's important to ask the question that you're asking, but ultimately, I am looking at what the media, what the narrative is, what's sentiment like around the company, and literally Tesla is getting punished for posts by Elon. That is undeniable. He's pissed off every single politician possible, every single side. Like he's no filter. And personally, I love it. I love it because I see that's the opportunity to me, is this dislocation between what the market is viewing and pricing in, and what is on the table. I have FSD. It's 11. It's not 12, and it's good. My wife is driving over 75% of the miles on FSD. She hated it when it was making mistakes around construction. It's not doing that anymore. It's making her feel safer. We both have 100 on our cars. She actually has 100 because she does all the driving. I sit at home and chat with you guys. And ultimately, the thesis hasn't changed. So if the thesis hasn't changed, and FSD is going to be solved, I have no doubt about it. I think that this step change, and we can write headlines about an employee, unfortunately passing away with, like, what was it, a 0.26% alcohol, and then the headlines that are published are, oh, it was an FSD death, even though they can show that employee had the option to install it but did not, unfortunately. And you have an Elon post that says that this is one of those situations where it could have benefited someone's life, but
Oh, yeah.
we have to look at the actuals of the data. And if it's, the data is, you're 11 times more likely to get into an accident if you're manually driving than manually driving on FSD, then, like, that's what the data says. And ultimately, the decisions, the regulators, everyone, at some point that shift will occur with sentiment. And now the Tesla stock becomes a hero again. And then you're going to see all that money coming off the sidelines, rotation coming in. So that's the bet. Obviously, it's, we don't know what the future is, but for me, that's the direction I see it. That's why I'm still all in.
And I have a real life case as well. And this happened, nearly 3 years ago. I don't remember the exact date, but I was driving home from work back then when I worked years ago. So it must be over 3 years. But there was a huge downpour on the freeway. I was doing about 70 miles an hour. All of a sudden, the car veers into the left lane. I'm like, what the hell happened? There was a 5-car pileup stalled right in front of me. I didn't even see it. I had no idea. So I definitely think this thing saves lives all the time. And that's not the only incident, too. It's happened twice to me. So again, they're very special. And you can see all the clips on Twitter and stuff of carpets and ladders and chairs and stuff holding off pickup trucks in front of the Tesla, or the Tesla stopping as somebody runs a red light. I mean, it's just quite remarkable. And again, as Jeff said, there is no value placed on that. There is no value. So anyway.
Okay, so we talked about valuation of the
it's
stock.
amazing technology. Absolutely. Yeah.
Okay, we talked about the valuation of the stock price. Each of us kind of have some ideas of what part and all that. We talked about automobile. Let's talk about AI, right? So this is the topics we were covering today. We're going to get to monetizing AI. So one of the reasons why the Mag 7 and the Mag 6 are just skyrocketing up is because they're getting valuation on AI. And Jeff has pointed out that they're getting valuation AI, even though their AI is actually large language model, but it's not actually bulletproof. It's making significant mistakes. And they haven't yet actually showed you a revenue stream for it that's significant, and yet they're getting valued for it. I think most of us would agree here, right, that Tesla's stock price today is not getting any value for AI. And so what will it take for that? And when I asked that question with Dan Ives, he basically says, you need to show us, the institutional investors, Tesla needs to show that there's a line item, they're getting some dollar out of it. And what James was just saying earlier is that one way to do that is showing an increase in uptake of FSD is a show of AI. What do you guys think that Tesla needs to do to show monetization of AI?
I just find it interesting that Microsoft went from 275 to 400 in a straight line, and they haven't even broken out and showed you their revenues from Copilot, and they still refuse to show that. I mean, it's been in beta last year, and it's been in production, limited production, I think in Q4. And then it's, so I find it interesting that stock went from 275 to over 400, with this AI promise, and they haven't even showed the data. So I think analysts, quite frankly, I like them all. I like Dan. I like a lot of the analysts we talk to. But man, they're all over the place. Some companies are not showing the numbers. If the answer is they have to show the numbers and put it in a quarterly print, I think that's too late. I think you've missed a lot of the alpha.
Agreed.
Yeah, I mean, I think Jeff's right, but I mean, just like, so something like Google, right? Like, I understand they're behind. People preference it, think it's behind Microsoft, but I use Gemini all the time with previously Bard. I think it's fascinating. It's not perfect, but I use it, and I go to it, and I love it. Like, I have a good experience with it. It's getting better. It is getting better. The Gemini for me, and I'm anecdotal, so I enjoy it. They're just starting to charge for it now, so it's coming off a small base. But Google trades it, 22 times forward. It's not getting a premium valuation, right? But they have all the data, right? I mean, everybody in the world uses Google, and if anybody could turn it into video, YouTube, like can't Google turn YouTube and AI? Like, I'm just saying, with my imagination, I'm not trying to be a bull on Google, even though I kind of am. Like, the valuation hasn't priced anything for that. Basically, it's an advertising business. You have YouTube revenue, and you have a cloud business that's growing, but it's not like a crazy valuation. So something like that, I think. But I agree with you. Microsoft valuation is stretched, and maybe it'll show up. But I think for Tesla, if they broke out FSD, like, how much are they generating on people that are actually buying it? So I don't know if they want to do what we talked about in the space. Maybe it's too small to do and break it out. But I think you need something. Otherwise, it's hard to get these investors just to make up these things and get them, because the market's always right. So even though we may say we think it's 1,000 today, if the market price is at 200, guess who's right? The market, because the market has the price. The clearing price is $200. So the market is right. Now, you may be right in 6 months or a year or 2 years or 5 years, but as of today, the market says it's worth 200. So that's the game of investing. So, I love it. And, I love James' points and everything. And that's what makes the market. So Tesla could skyrocket out of nowhere. And once more people get aware, I think one of Tesla's biggest problems compared to an Apple or a Google, everybody has Android. Everybody has an iPhone or a Samsung. So these products are in everyone has Office for Microsoft, Bing, things of that nature. But very, very few people actually have a Tesla. Like, if you think about that, like, no one has a Tesla. I mean, millions of people do, but most of the world, out of the 6-7 billion people, have never experienced a Tesla. They don't know Tesla technology. All they know, it's a car, right? But most people have never experienced what you guys have. So, I think that is a little bit of a disconnect. So, but yeah, great conversation.
Yeah, and Christian, on Google, just for 1 second, there is that whole cannibalization aspect too, because some argue that the subscription-based model of Gemini Pro could lead to a decline in Google search-based advertising revenue, which is probably why it's kind of stuck.
Yeah, I agree. That's the worry. Yeah, does it encroach
So
on their
what other things
advertising?
what other things can Tesla do to monetize AI? I mean, obviously we're waiting for Dojo partnership. So there you go. That's right. So if Tesla announces, or the partner announces they're going to do the software, wasn't there just a tweet today that Ford said that they're looking to
open to working with other automakers? Yeah.
This
but
is
they
Ford
also,
CEO.
I think Jim Farley also said they're going to focus on Pro, which I think is their truck business. I don't really follow Ford, so I couldn't tell you. But did you guys see that too?
Did not see that. So they're on the commercial business, which is their van delivery.
They call it
business.
Pro, Ford Pro, which is all that. I think it's pickups and that type of stuff. They're going to just double down on that. I think it sounded to me when I read that from Jim Farley, is like he's waving the white flag. It's like, okay.
Yes. Yeah.
What do you call it?
Okay.
Retail cars.
So, right. So Jeff, you're right. So if Tesla announces a partnership, announces that they're going to take Tesla's full self-driving or other software, then that is another huge jump. Correct. What else?
Yeah, because we do have an analog for that too, and that is the supercharger business. And Stellantis was the last one to drop. So we saw the pump in price when all the OEMs started loading on too. I think the order bidder stuff is underrated. I think that technically is an AI play as well.
I think the biggest AI play is the bot. And the reason I'm so excited about it is I do think that even before you have bots being sold to people and factories and buying it and showing you actual revenue, it's the one thing, like Christian was saying, that it needs to capture the investors and the communities, the cities, the people's minds to understand this, and they easily understand the bot. If they see demos of it and they see that thing can do so many things and that it's neural net, based. It's learning things, being able to speak to you and you speaking back to it. Many companies are now dropping demos every single week showing that this is possible. That's the one that I think people will invest years ahead before you actually have sales. And that's why Elon has been trying to change the narrative for Tesla to be a robotics AI company. And I've been saying for months now, I want him to hammer that home. We're a robotics AI company. Stop talking about the cars so much. The cars are a robot, as he's been saying, right? We have 5.5 robots out there right now. And as soon as you can talk to it and it talks to you back, you can give it directions, then people will start to understand there is AI everywhere.
Yeah.
I agree with you 100% on the humanoid part, Herbert. That was well said. I agree with that.
And did you guys see the X1 demo? It's like a bot on a skateboard. That's very
I just
impressive.
did it.
Yeah.
Yeah.
And I
just
don't
did
know
a
who
video on it.
X1 is. Yeah.
So X1 is funded by OpenAI. So OpenAI has a number of investments, including Figure and X1. And in this case, they did not focus on the bipedal walking, although it has knees and it can bend down. It's got wheels. They don't have hands. They just have pinchers. But they showed this 2-minute long video of 30 X1 bots, actually called Eve. Their name is Eve, and they have another one called Neo. Neo is the one that's going to be humanoid bipedal with hands. Eve doesn't have it yet, but they showed 30 bots in the office and factory doing all sorts of activities, and all of that was trained, but it's all autonomous at this point. That's the big drop that they just did this week.
So the point is these things are here. The question is who can scale the best and which bot will have the best dexterity.
I don't know who was in this room, in this chat board, or I don't remember, but so many people kept telling me, oh, bots is going to be years ahead. And I'm like, what are you talking about? They're already in factories now. Digit's already working at Amazon. And like, they're just doing point-to-point, pick and place jobs. And no. Now we're seeing drop after drop of videos of bots being able to do lots of, no one's ever showed useful work yet, but they're able to show that you can train it to do things.
That's what I think Tesla can do, is showcase Optimus working in the factory, and then a little blurb about how much money they're saving, and there you go. You have others that are going to buy in. But I go back to that thought that Elon has stated that the bet the company moment is, we will drive down margins if we have to on the cars. Our priority is to scale this robot to get as many on the road as possible. We're not worried about competition. We're not worried about anything. What we want to do is solve FSD. So I think that once FSD comes off beta, and then you can go to that next step of, a Ford coming in and saying, you know what, we see what you're doing. We don't want to develop it the same way, and we'll pay your licensing fees. Then you have that FSD starting to get priced into the stock. So, Christian's point is very well taken, that it's all about earnings right now. But if you see that story and the market sniffs out that earnings are coming, I think that we're going to be off to the races.
And there'll be way more earnings if there's way more cars, and there'll be way more cars out there in a couple of years from now if you lower the price and you lower the margins, lower the earnings this year.
Yeah, and build more
all the
factories,
data, which sucks in all the learning and all the data all around the world at the same time. That's the big.
So I have a question. So this is just a little thing, and again, just like some credibility. And I'm not trying to be contrarian just to be contrarian. I'm being honest. So when Elon talked about V12, he said V12 before it came out, it won't be beta, but we know that it says V12 beta. Does that dissuade any whenever he says, I know it doesn't dissuade you, but I'm just saying, do you think it could dissuade investors that aren't Tesla, Uber, Hyperbulls? Don't you think some of those people might say, well, he said that, but I mean,
that's not what he said.
Can you see where? Okay,
sure, but that's not what he said. He said if you're going to remove the beta, I'm paraphrasing. Why would they ship 12 without the beta label? It hasn't even gone out wide at all, right? It's just at employees and a few select high-profile people. So it's going to be 12. Then we're going to get all the people that it's eventually going to trickle down to us at at beta label, and then at some point they're not going to like step change the entire code base again, from my understanding. Then they'll feel comfortable enough to remove the beta, and 12 is going to be the one. He could still be right in that regard. Is it possible that they come up with 13 and they discover something else? And certainly that is a possibility, but that's the way I understood it.
No,
I think he
100%.
puts targets on his team, and I think these things are, when you're doing something new that's never been done before, it's really hard to call it by a date and a month. So maybe in his head he thought, full release on 12 by the end of the year. It's not there, but if it happens by the end of March, okay. It's one of those things. If it takes another year, well, I think we're having a different conversation. But when you're doing these new things you can put a schedule around any new car program. If you're doing existing technologies, you can say, I'm going to ship this thing in 14 months, boom, boom, boom. But when you're doing something like a Cybertruck, where all these things are new, all the schedule variation basically is additive. And when you take something like FSD, I think what he's doing is he's putting intermediate milestones and dates on his team to kind of push and drive the whole effort. And not that his team needs to be, I think they're self-motivated. But you have to do that as a leader. You have to put dates and expectations on them, because you want people converging on a date. But I think these things are very difficult to call. But if it's plus or minus 3 to 6 months, I don't know if it's material at that point. Let's see.
Yeah, absolutely.
Yeah, and I think that posting that the exact words is the best. And clearly I took it a different way, because one can interpret that as version 12 when it ships won't be beta. I just think that's like an unfair way to think about when you're step changing and rewriting the way that it performs.
And I'm not trying to be picky about. I'm not trying to be picky union. I'm not trying to hope. I'm just saying, to me, it's version 12. So I'm just saying, when Elon does that, I know he's trying to solve the impossible. But what I'm just saying, it just puts in question that if Elon's not sure, like, why make that statement if, like, I understand he's pushing teams, but he doesn't need to respond to Hallmark.
Okay.
Version 12 won't be beta unless he's 100% sure that version 12 won't be beta. Am I being crazy?
No, I'm with Xander here. What I read here is for FSD beta 12 maybe later this year. Of course, they missed it. It's not December 31st, right? We're in February 2024. Version 12 won't be beta. What he means by that is that version 12 is going to be the version that's going to take us out of beta and become real. Now, whether or not they launch it and it's there for a couple months and it's got the beta label, that's not the point. The point is simply that this is it. This is the one that's going to solve everything. The confidence levels there that the neural network is no longer going to hit that local maximum that they had in the past. The local maximum happened, by the way, because they had they had to have developers coding the code and trying to find each of the different edge cases that are out there and trying to find that. And they were compute constrained. Now they've figured out that this neural net, it's all about just a certain amount of compute can actually on its own teach itself. And so now that local maximum is no longer there. What the local maximum now is the compute. They now know that if I just continue to add as much compute, as much video, which they couldn't use all the video that they had, by the way, and they have too much video. So the more that they can put in with more compute, the more the edge cases will be solved. And at this point, the confidence level is that this is it. This is the one that's going to take us to the promised land.
I hear you.
And there's one other thing I'd like to raise too, and it goes back to kind of traditional metrics. So I put together, because we talk a lot. Well, it's only my second time here, but we talk a lot about NVIDIA and Tesla. So how about we compare them from a financial perspective to see how some key valuation metrics roll up? What do you think?
Yeah, that'd be great. I know, NVIDIA, high price to sales, but the earnings is coming through at a great clip. But I would love that, James.
Yeah, so this is the first slide. So basically, the free cash flow from Tesla cannot be understated. Okay, 4.4 billion. But what I did in prep for this was pulled out some of the key ratios I look at. You got the free cash flow per share, $7 for NVIDIA, $1.25 for Tesla. Price to free cash flow ratio, NVIDIA smokes it. But when you look at PEG ratio, EV to EBITDA, which is critical as well to compare different types of animals on core financial data, and PE, Tesla wins. So from this perspective, I'd like to get your mind share around what you think of these ratios, and do they matter? Or does this mean that technically Tesla is very undervalued in 3
So
of
that's
4?
great. I got a great answer for that. So that PE, that 96 on NVIDIA, they're going to report earnings. That 96 is going to go down.
Yep.
And they're probably going to do 12 to 13. So Tesla's PE of 46 is a little bit not correct, because their forward PE, if the earnings are going to be 3, that 46 is closer to 60. And NVIDIA next year, they could do anywhere from 20 to 25. It's going higher. It's getting in that 22 range. So if you times 22 times 40, you have a $880 stock, and that multiple's at 40. So I think NVIDIA on the PE, it's misleading what it is right now, because they're about to drop earnings, and their earnings is going to explode next year.
Okay, these ratios are, by the way, for full fiscal 2023, I should have said.
Right. But next year, that 90, when they drop earnings, the 96 will go down. And then next year, they're probably going to earn 22 to 24. And if you do that, then that forward PE collapses from 96. It's going to be in the 30 to 40 range. And you could still have a way higher stock price. Where Tesla's 46, the earnings is flat to negative. So that the forward PE, unless they surprise with earnings, is closer to 60.
And then we go back to kind of what Jeff always talks about, how they're controlling COGS, bringing them down sequentially every single quarter. And then there's a whole bunch of value add that can be popped into the actual stock price. Megapack margins are coming, Megapack growth, FSD take rate. Imagine FSD comes out of beta in 2024. Things will be very different.
There's a lot of great things that could happen for Tesla.
So Chris, it cuts both ways on these.
Yeah, no, I agree. I was just, that PE, I had to mention it because it was like, that just was hanging out for me just to grab onto.
Oh, of course. And these are full 2023 fiscal returns.
I got you. Yeah.
I want to focus on free cash flow per share, because I know James asked before we started this show, he said, hey, did you see that Jeff Bezos quote? And the funny thing is, I just did a show with Larry Goldberg. We're going to publish that in a day or two, where we focused on this. And this is the quote from,
you have it.
I've got it here, James. Yeah.
Oh, great.
Where Jeff Bezos says, our ultimate financial measure, and the one we most want to drive over the long term, is free cash flow per share. And one of the reasons is that this is the least that's, the financially engineered. So when you compare other companies. But what's interesting when you look at the quarterly perspective from AJ here of free cash flow trends by the automakers, yes, GM has the most free cash, but you can see what their trend is. It's just crash and burn. Toyota crash and burn. Now they could be investing in all that, but Tesla's is the one is rising fast. So you got to look at the cash flow and figure out where the cash is going to be in the future. Earnings is important, of course, but it's, again, engineered. There's like ways to make it look better. We all know the reason why Ford and those guys look so good is they stuff the channel. They throw it to their dealers, take it off their books, make them look good. But anyways, free cash flow, that's going to skyrocket. That's why we're going to be back to a cash machine.
Free cash flow is the holy grail. But free cash flow is everything, right? That's the whole game. But if you have great free cash flow, the odds are you're going to have great earnings. So it does translate down, not exactly.
But that's what we're saying to you.
So
you don't believe us. You don't believe that.
Like I used to say in earnings, we need Tesla to become an earnings machine again.
It's going to be.
That's what they need to
I think all of us, except for you, believe it's going to happen, because you don't trust FSD until you see it.
It's going to happen. I play it from a probability. So certain businesses are easier to understand. Tesla, I understand, to the Tesla community, and me too. You guys think you understand it perfectly, and Wall Street doesn't get it. But to the average investor who's looking at all these companies, what Tesla has to pull off is not super easy, and it's not super predictable. People, when they invest, they like some type of predictability and some type of thing they can monitor. So when they look at something like a Google or a Microsoft or an Apple, it's easier because they're not trying to change the world. They're just trying to grow free cash flow. buy back some stock. So you're right. Tesla is going to be the outperformer if they can get it by a mile. But sometimes investors don't want a 10 or 20x. They're looking for their double or their triple. So if it's a more predictable business, they go to there. I'm just saying how it is.
I'd like to take what you said, Christian, and pass it over to Jeff, because one of the things that I know, Jeff, you and Alexandra spend a lot of time on is their capital efficiency. When you're an investor, you want to buy things that are very good value or very undervalued. So when you look at how Tesla leverages capital, it is absolutely mind-blowing when benchmarked against all the Magnificent Seven. Jeff, would you mind taking that hot one? You're muted.
You're muted.
I think the closest to them, I think it was Apple. It's pretty close. They have massive sales, but when you look at their and I've worked in, and I worked today in with a lot of these different companies, and what I can surmise and what I see is that if you look at the stats and then you look at actually how they work and how they're led, they're vastly different in terms of you give them $1 and what they do with it from an R&D perspective and how it's spent. You can even walk into the four walls of these companies and you can see how things are managed quite differently. One's kind of like a little bit, barren and like just straight into you're walking into a factory kind of deal. And the other ones they're just very different. So that is not a one-off thing. That is a trend that's been occurring for multiple years. And if you look at it over 4 quarters, if you look at it over 4 years, they've been extremely capital efficient on the R&D side. Same thing on the manufacturing side, extremely efficient. If you look at the number of models that Tesla ships to get to their 2 million units of volume versus the number of models that BYD uses to basically overtake them in shipment rate and of pure EVs in Q4, it's something on the order of 6 to 8 times the number of models that they need to do. So when you're thinking about leverage, you're thinking about capital leverage in your own factory. If you're thinking about R&D leverage, like how many programs do I need to develop to make X amount of money? Tesla is doing it with a very small number, and they're hitting that large sales number, whereas these other ones need many, many iterations and many, many different geographies to get to make their money. So their efficiencies are lower, both from an R&D perspective as well as above gross margin when you're thinking about sales and sales efficiency. And that's why their inventories are much higher. That's why Tesla can run, inventories that are 2x the best auto and 4x most of auto, and actually 10x better than the rest of legacy EV auto. So that efficiency really hits on the R&D side or below gross margin, as well as on the sales side and above gross margin when you're thinking of all the different lines of expense. And it's it's really not even close. And the question is what does that do when you start taking these higher gross margin things like FSD into the equation, or the bot, for example? And I think when their SaaS business really comes in, that number becomes really explosive.
Well said.
All right, that's our final topic for today. Sometimes we like to cover things that are not necessarily Tesla, but it's an election year, 2024. Anybody want to start that off?
You're going there?
Wait,
I'm gonna go there.
Yeah,
sure.
let's go. Who is each person voting for?
I got two very highly qualified
You
candidates.
just did not do that. Come on.
Well, Elon's talking about it, so
No, I think that
Okay.
I don't want us to be political, absolutely, but it's an election year. It's not a topic we can't discuss. And I don't think we need to, talk about, again, what our political sides are. That's not what the show is about. But
I'll jump in on this and I'll say what we've been saying, which is what Delaware did and not listening to shareholders. That to me is all the politics we need to see as shareholders who voted for something, even if you didn't vote for it. But over 70% of shareholders voted for the compensation package, and it's thrown out. Tell me that that's not politically motivated. I think that has no place in corporate America. This is going to change. You see Elon moving SpaceX out of Delaware, and I think it's a tremendous mistake on their part to allow I know the legal side. Lawyers are defending you chose Delaware for its benefits. Well, you have an unelected official that gets to decide your corporate fate, and so I think that demotivates entrepreneurs, and no one that's at the cutting edge of tech will ever step foot into another thing like this, where you get demotivated for taking risk.
What happens to the stock market in an election year? I mean, it's always going up, right?
Yeah, conventional wisdom is it does. But there are a couple of exceptions, but most of the time it does. But the reason the market goes up is because the people that are in office sometimes like to, how do I say, pump the markets, pump the economy. So there's going to be some quantitative easing, which means kind of money printing and lower rates, which will help a lot of stuff, and maybe some other fiscal promises. So voters feel richer. It's like, oh my God, somebody put $400 in my pocket. I'm going to vote for them. So I think that's a huge part of it too. The question is, and I don't know the answer to this, will Jerome Powell play bull? Because he hasn't exactly been playing bull so far, and his DNA is Republican. So let's not forget that too. Not getting political.
No, that's great. Great point, James, because me and Jeff used to go back and forth with this. Jeff was like, Powell's going, and I was like, I don't know. He's pretty, so far he has not budged. Now let's see this summer when the first cut, but Powell's been pretty, it doesn't seem like he's like, and here's the difference. Biden, this is not political. This is just fact. Biden doesn't put any pressure on Powell. I don't know if Biden, even knows Powell's around.
Exactly.
I'm just saying. Trump berated Powell. And when 2018, when the market was down 20%, Trump wanted the stock market up, and he was just berating Powell, and Powell finally capitulated. But Powell doesn't really have anyone doing that right now. Maybe as the election gets closer, Democrats, if the economy's weakening or the market's doing something, you've already seen some Democrat senators come out and talk about that the Fed needs to cut rates. I don't know if you guys noticed that. So it is starting to chirp, but Powell hasn't really responded. So great point, James. So this will be interesting what we see out of Powell over the next few months. Yeah. And
there's also a few things that are going to explode. $1.2 trillion of commercial mortgages are going to mature in the next 12 months. All right. Yep. They're not going to be able to find a home unless there's a lot of money flushing around the system. So they're going to have to print, and they're going to have to cut, or else.
And also, of course, China's deflation is spreading. You're seeing Japan now, first time saw a recession. It's coming here. So even though these little numbers aren't the job market, all, it's just quite not yet, showing it. But true inflation, come on, it's going to hit hard. It's going to come very soon.
But also, if you look how the U.S. government measures inflation, it's completely comical. And then you look at the breakdown of the CPI. You know what drove it up? The surprise was car insurance.
Car insurance.
Like,
and owner's equivalent rent was a little sticky. Yeah, I always view. I was talking about this. I view CPI and PPI as kind of like the AFC and NFC championship in football, and PCE is the Super Bowl, and we haven't even had PCE yet. So. I mean, it's interesting. It's priced out of March. It's probably not going to happen in March, but May becomes more interesting. We're very close. I just think a year from now, and this is one of the things we didn't going full 360. We didn't talk about with Tesla. A year from now, we could be in a rate cutting regime, and that's great for assets that are long-term financed, and that could be the the wind at their
margins.
Back. We're certainly not in a rate increasing regime anymore. And that's been resistance for auto for the last, call it 18 months or almost 2 years. So that could be a big help. And the other thing to think about is this year, and I admittedly have been wrong in terms of the IRA. I thought it would drive more demand. It hasn't done that yet. But if you get all three branches going Republican, I think there's be a lot of people are going to be concerned about the longevity of the IRA. And could that drive an increase in sales, this year as that race shapes up? It's pretty interesting to watch.
I don't know what you mean, but Jeff, I just saw numbers that came out that the government was saying that this is how the point of sale IRA is going gangbusters. They're distributing it like crazy.
No.
Well, we don't know
No,
the
what
start
he's
date
saying-
or the end date of the numbers that they gave.
No, Herbert,
So is
what
that
he's
2
saying
weeks?
is that, yeah. I think the bigger point is if the Republicans get a hold and if they're anti-EV, they could reverse the legislation. So all those battery credits and car credits, that could be upended. So I think that's a risk, though. I hear what Jeff's saying short term, but the market will look at like, okay, years out, they're not going to have
Yeah.
it. So
It may
I think
take
that's
them
a
a year or two.
long-term negative for Tesla. Yeah. Anyway, yeah, that's just fact. It's not political. It's just,
That's
Republicans aren't big.
It's an
EV
election
people.
year.
Yeah.
So interesting. Okay.
Yeah. It was a
Good.
good conversation, man. We
Good
hit a lot of
conversation.
topics.
We covered a lot.
A lot of
Yeah.
good stuff.
Valuation, AI, lots of conversation about the AI.
No,
We
good
did, yeah.
stuff. Smile, Xander.
Okay. Thank you guys. Thanks everybody. Thank you, James. Appreciate you joining us. We'll
Thank
have
you for letting me be
Alexandra
part of it.
next time. See you guys.
Yeah, I love
Bye,
having
everybody.
James on.
Thanks, James.
Yeah,
Thanks, everyone.
thanks for having me,
My
James.
pleasure.
Great.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.